24 agreements were signed. We would set up a high-powered task force which will look at economic issues. We can see more visible enthusiasm among Chinese businesses to invest in India.
We have a historic responsibility to turn this relationship into a source of strength for each other and a force of good for the world.
Wachan Han Kaoxing Lai Tao Zumingda Tinghua Tashui.
It's mostly about investment in manufacturing, investment in technology, big data. It's investment in infrastructure.
China and India, to me, are like the two rocket boosters on the big engine of Honeywell.
Well, 24 agreements worth $10 billion, promises for greater Chinese cooperation in the Make in India dream, interest in funding and technological partnerships in turnkey infrastructure projects, stronger trade ties. Prime Minister Narendra Modi has gotten down to business on the second day of his maiden visit to China, and it's just the beginning. Hello and welcome. You're watching India Business Hour. I'm Kritika Saxena, and with me is the beautiful Surabhi Upadhyay. Fabulous Friday today, Surabhi.
Aren't you in a good mood for sure? Thank you for the compliment, Kritika. But no, it's been an amazing trip, and we've still got a couple of more days to go, at least, the last leg coming in tomorrow. And as the Prime Minister heads then to Shanghai, it's going to be a lot of business talk. In fact, as he interacts with the Chinese and Indian business community, we're expecting 20 agreements this time around, primarily from the private sector, to be signed up between the two countries. So it's going to be a very exciting and action-packed weekend. A lot of the China news and the China details coming up on the show, but also the other headlines. Let's take you through them. Two companies belonging to the JAYPEE group miss their interest payment schedules on loans. Lender banks struggle to keep these loans from becoming non-performing assets.
And India's trade deficit narrows to just under $11 billion in April from $11.79 billion in March. Exports remain sluggish at $22.05 billion. Imports fall to around $33 billion.
Still looking at 32,500 for the Sensex.
CNBC TV 18's guest editor Rhythm Desai says Indian equities are still in the middle of a bull run even as markets end a volatile week on a positive note. The Nifty reclaims 8250. The Sensex climbs over 100 points.
And the RBI remains unruffled by the staggering fall in the rupee. Sources say it is well guarded to combat up to 4% depreciation in the currency through FY16. That's an exclusive.
After TCS and Infosys, Wipro finds itself staring at a class action lawsuit in the US. A former employee alleges violation of local labor codes and failure to pay overtime wages.
And 11 lakh houses to be built in the Mumbai metropolitan region by 2022. The Maharashtra government's new housing policy also promises 8 lakh houses across the rest of the state, promises to supply the land for affordable housing projects. Another exclusive.
And speaking of Maharashtra, the state's chief minister engages the dragon in style, says Chinese companies are keen on investing in large infrastructure projects like the Mumbai Trans-Harbour Link, adds that Foxconn could be setting up a new plant in his state.
And get ready to pay more for petrol and diesel starting midnight tonight. All companies hike petrol prices by 3 rupees and 13 paise per litre. Diesel prices to go up by 2 rupees and 71 paise per litre.
China and India, to me, are like the two rocket boosters on the big engine of Honeywell.
Never mind hurdles like weak infrastructure, tough customs clearances and a hostile tax environment. U.S. conglomerate Honeywell's president and CEO Shane Ratri says India and China will be rockets that propel global growth to the next level. All right, let's always start with the market action. Up first, it was yet another volatile session on the Lal Street, but indices managed to end the day on a steady note. This helped the market gain ground for the second week running. For the day, the Nifty reclaimed the 8250 mark, and the Sensex closed nearly 1% higher at above 27,300. Heavyweight stocks like HDFC, State Bank of India, and Infosys led from the front. Now, while we're discussing the Lal Street, let's get you our guest editor's take on the matter. Rhythm Desai of Morgan Stanley.
In dollar terms, the market is almost back to where it was at the start of this, on the election day. Almost there. I mean, we're 2 or 3% from there. So you've almost given up a year of gains. So it has to be a super opportunity for people to buy stocks. I am actually very, very bullish. So I stay that way. And these are corrections. They ought to be coming in every bull market. We are still looking at 32,500 for the Sensex. I think our macro has gotten better. The data points are getting better. I think we've made some progress on legislation. I wouldn't say a whole lot, but we've made some progress. So the domestic situation has gotten better. So maybe I think we are dealing with a trough in the Nifty. 8,000 seems to be a level, and I think that's a very good level in my view. If you have a 2 to 3 year view, you want to accumulate stocks. For the past year, the market has been heavily anchored towards quality. So buy high ROE, high free cash flow. I think it is starting to lose that. And that is why you're seeing, this dispersion in performance, because the market is, I think, getting a slightly more excited about cyclical. By the end of this year, quality will not be such a good thing to actually be owning for people with shorter term time horizon.
Some cheerful comments coming in this Friday, but here's some more good news from the macroeconomic front. Trade deficit for April has narrowed to just under $11 billion from $11.79 billion in March. Exports were sluggish at $22.05 billion and imports fell to around $33 billion. Lata Venkatesh, as always, is here to break down that data for us. Lata, what do you make of these numbers in short term? Is it good news, or would you just say that the top line is sluggish?
Well, the top line number, or if you can call it bottom line, the trade deficit at 10.99 is a good number. It's lower than the month ago number. And even if you maintain this 11 billion trade deficit every month, given our other flows in terms of software flows and remittances by Indians living abroad, the current account deficit will likely be around 1% or 1.2% of the GDP. So no worries at all on the actual trade deficit number. Below that, export data coming in at 22.05 billion is a little lower than the March data, but that's okay. March is always a longer month. April has more holidays. March, people work to completing schedules, so things tend to be, imports and exports tend to be higher. But the export data, if you compare it to year-ago levels, is 13% lower. And that could be a source of worry. The appreciating rupee, or the rupee that refuses to depreciate, has cost us a bit of exports. But in the month of March, exports had fallen by 20%. This month, they have fallen only by 13% year-on-year terms. So clearly, the worry is decreasing. One would hope, of course, that exports grow a little faster. The brightest point, it looks, is gold. Gold imports have fallen to 3.13 compared to 4.98 in the previous month. But actually, I would have expected that it would fall a lot more. We were averaging between 1 and 1.5 billion in terms of gold imports. The month of March had shot up to 5 billion or 4.98 because a lot of people had not imported gold in February, expecting that import duties will fall. So there was bunched up imports in March. As well, there was imports because Akshaya Tritiya fell in April, and because of that festival demand, it was expected that gold would have been higher. So going by that, it should have fallen a lot more in April. It's fallen to 3 billion, 3.13. One would like it to fall towards that 1 to 1.5 billion mark. Then we would have kind of tided over the hump of the problem the gold imports created in their heyday. It's good news, but it could have been better. Otherwise, there's nothing much to complain about the April trade data.
Okay, so thanks, Lata, for that. The April trade numbers not painting a disturbing picture at all. Moving on, Manoj Gaur's JAYPEE Group may be on the brink of a huge default. CNBC TV 18 learns that the JAYPEE Group, with a staggering debt of over 65,000 crore rupees, finds itself unable to service interest dues for its power and infrastructure companies. Ritu Singh is now joining in to get us some more perspective on the story. Ritu, that's a massive debt load and it's a problem for JAYPEE, but I'm guessing perhaps as big a problem for those banks.
You're absolutely right, Surbhi. It is a huge risk for the banks in case the account becomes an NPA. As you mentioned, 65,000 crore, that's a huge amount of debt that is on the books of the JAYPEE Group. And what we're picking up from sources is that two of its subsidiaries, JAYPEE Power Ventures and JAYPEE Infratech, are on the verge of becoming NPAs. And in fact, a special mention account in the books of the banks, which means that they have defaulted on interest payments between 31 to 60 days. But of course, banks are very taking this fact into cognizance, and they have swung into action. In fact, they have taken a corrective action plan under which they plan to dispose of power assets as well as real estate holdings of the company. And this sale of non-core assets is expected to help the company recover, help the banks recover some of these dues. Some of the largest names in the banking space, State Bank of India, ICICI Bank, as well as IDBI Bank, have a huge exposure to these companies. 24,000 crores is the debt on the books of JAYPEE Power Ventures, and 13,000 crores is what JAYPEE Infratech owes to the banks. So there is a huge risk involved if the company defaults, and therefore bankers are taking every step to ensure that it does not become an NPA. It still remains a special mention account. It hasn't become an NPA, but the bankers are doing all they can to prevent that from happening.
And on cue, the stock in fact ended the day in the red, down by about 3%. In fact, when Ritu broke the story, it fell by almost 5% and then recovered a little bit. Now let's get to our coverage of the event that has the world's attention riveted. Asia's biggest and fastest growing economies, Prime Minister Narendra Modi's 3-day maiden visit to China. Well, if day one of his visit was all about sightseeing and cultural exchange, day two was all about the Prime Minister and his delegation getting down to some serious business. So the bilateral talks between the Prime Minister and China's Premier Li Keqiang covered a host of issues, including the contentious border issue, but the main focus area was the growing trade imbalance between India and China. To right this imbalance, both nations have signed a total of 24 agreements worth a whopping $10 billion. They have also agreed to set up a joint task force which will be looking into the various trade-related issues that the two countries are facing. What's also significant is that China has been very supportive of India's Make in India mission and is looking to increase its investment in infrastructure, particularly the railways, and setting up of 2 high-speed rail corridors in India.
We are committed to set a new direction between the two largest Asian countries. I believe that my discussion with President Xi and Premier Li have advanced our relationship in that direction. Our conversations were candid, constructive, and friendly. We covered all issues, including those that trouble smooth development of our relations.
We can see more visible enthusiasm among Chinese businesses to invest in India. This interest to invest in India was also expressed by Chinese leaders at different points of time in their meetings with us. How that interest translates into business agreements obviously will depend on people on our side, people on their side. Our sense is some of it is translating, and you will see the results of that tomorrow. We are also objective enough to recognize that we need to keep improving the ease of doing business in India.
Okay, so tracking the tiger and the dragon, chart out a joint growth strategies. Our very own Shireen Bhanu has been in China all week, and she now joins us from Beijing to take us through the key highlights of day one of Modi's visit. Shireen, it's been a busy, busy day for you and for Mr. Modi, hasn't it?
All right, so the action in Beijing has now concluded. It was a 90-minute conversation that Prime Minister Modi had with his counterpart this morning, and the action will now shift to Shanghai, where more business agreements are expected to be signed. But if I could take you through the headlines of what has emerged at the end of 2 days of talks, first with President Xi, and then the talks that both sides had today. A joint statement has, of course, been released, and interestingly, there is now a separate agreement between India and China with regards to climate change. But on the economic headlines, there hasn't been much progress on outstanding issues. So whether it's things like correcting the trade imbalance, market access for Indian companies, a level playing field for Indian companies, attracting Chinese investment into India, attracting value-added investment from India into China, those issues continue to be outstanding, and hence both sides have now decided to set up a high-level task force, the composition of which we don't have details about. The timeline by when they will make their recommendations is not known either, but at least the first step has been taken. There is now a clear acknowledgement on both sides that they cannot continue to be in denial on the outstanding issues that are holding back trade and investment at this point in time. Separately, they've also decided to set up a committee that will address the WTO mechanism, and it will address issues pertaining to the WTO as well.
All right, Shireen, you'll have a busy weekend ahead of you. So the action now shifts from Beijing to Shanghai, which is where Prime Minister Narendra Modi has flown to tonight. He will spend all of tomorrow in talks with China's President Xi Jinping, a host of industrialists and chief executive officers of Chinese companies, and even the Indian community in China. Over the course of the day, India is set to sign more than 20 deals, possibly with private sector companies in China.
Well, that's right, Kritika, but it's not just Prime Minister Narendra Modi. He's not the only Indian policymaker who's had a very busy day in China. Maharashtra Chief Minister Devendra Fadnavis is also in our neighboring country, and he has seen quite a bit of success in getting the Chinese companies interested in pumping money and technology into Mumbai and in Maharashtra's development programs. In fact, Shireen caught up with the Chief Minister and began by asking him about the specific sectors that he's looking to attract investment into.
Mostly about investment in manufacturing, investment in technology, big data, it's investment in infrastructure. So it's basically we had a long trade relation with China, but not much investment has come from China. So I look forward for more and more investment after this forum being set up.
But is there any commitment that has been made by the Chinese authorities, or any indication of the kind of investments that could potentially come into states like yours?
I think there are a lot of indications. Yesterday I visited Henin. I went to Foxconn, and the chairman of Foxconn is very keen to come to Maharashtra. He is visiting.
But they're pulling out of Chennai, so they're pulling out of Chennai and moving to Maharashtra?
No, that Chennai plant is already shut. This is that was Nokia facility. This is iPhone and iPad, and they are very keen to come to Maharashtra to set up entire ecosystem, not just a manufacturing unit.
So the supply chain as well.
Absolute, the total value chain, supply chain, they would like to set up. So they are into negotiations with us. Today also we had a sister city agreement with Aurangabad and one of the cities in China, because in 4th BC, the monk from Aurangabad, Ajanta, he came to China and showed them the way to have the sculptures and the caves. Sure. So there are many areas where we are trying to collaborate.
Any specific infrastructure projects where you are looking for Chinese investment as well as Chinese infrastructure expertise?
More than investment, I'm looking towards Chinese expertise in the field of building the Trans-Harbour Link in Mumbai, and a coastal road in Mumbai as well.
Any developments or further developments on both of those projects? The last conversation you and I had was a couple of months ago. Has there been any progress? Because we haven't heard any progress so far.
No, there's a lot of progress. Now both our projects are in the last lap. That's why I'm looking for the best technology and also financing. Although there are the Japanese have agreed to finance one of the projects. The other project is also said to be financed from certain other countries. But I think that the way China has built Trans-Harbour links a 26-mile link in just 4 years. I think that technology I need to take back. So tomorrow I'm visiting Yongyang and then Qingdao, where I'll actually have negotiations and interactions with the technology providers.
Have the Chinese shown interest in either of these projects, either the Trans-Harbour Link or the other coastal road project as well?
Yeah, they have shown keen interest. In fact, I think now with the initiative of Mr. Modi, the Chinese have found a lot of interest in India, and I feel that more and more Chinese collaboration would come to India. Today I'm meeting President of Biki Photon. With them we are establishing a Chinese park in Maharashtra on 1,000 hectares of land. So I think that be it manufacturing, be it infrastructure, the Chinese have keen interest to come to India.
FDI into the state, what is the target that you have, sir? How much do you believe you will be able to get in terms of fresh investments? You spoke about Foxconn, for instance. Who are you talking to? Who are the other large investors that you're talking to, and what kind of FDI do you foresee coming into the state?
I don't believe in speaking in figures, because many times they are misleading. Just wait and see. Largest FDI will come to Maharashtra. Thank you.
By when, sir?
Just wait and see.
Well, wait and see indeed. But speaking of Maharashtra's big push in infrastructure, here's a development that can potentially change the skyline of Mumbai and the state. The Maharashtra government has prepared a draft of a new housing policy that promises 11 lakh houses in the Mumbai metropolitan area, but by 2022. CNBC TV 18's Alexander Matthew has caught hold of a 150-page document and is privy to some of the features of this draft policy. Alex, what's the central theme of that new policy, and going ahead, what is the timeline or what is the plan that they have charted out?
Well, the central theme of the new housing policy in Maharashtra is affordable housing, and the overarching objective of the policy is in line with the centre's Housing for All program that will culminate in 2022. What differentiates this policy from the earlier one is that this one has a clear target as far as the number of houses that need to be constructed is concerned. It plans to create 11 lakh houses in the Mumbai metropolitan region and 8 lakh houses in the rest of Maharashtra by 2022. The target that has been set is divided city-wise, region-wise and scheme-wise. So, for example, if you look at the slum rehabilitation program in the greater Mumbai region, over 230,000 houses will need to be constructed by 2022. Most of the housing stock that will be created under this policy will be reserved for the affordable housing segment. It is clearly stated that 30% each of the new housing stock will be reserved for the economically weaker segment, for the low income and for the middle income group. Apart from this, there is likely to be a major thrust on redevelopment as an avenue for creating housing stock. The government has said that it will take the onus of creating a land bank for affordable housing onto itself. For this purpose, the MHADA will be given the mandate of creating a master plan for the land bank of the government. When we're talking about the government land, there are several instances where a reservation is existing for the land, and this is likely to be cancelled, and the land will be used then for affordable housing. So from the look of things, the government seems to be trying to reduce its dependency on private developers for the construction of affordable housing. Experts have welcomed the move and the target set by the government, but they have cautioned that implementation of the policy is likely to be a challenge. Back to you.
And speaking of the Maharashtra government's new housing policy, remember we managed to catch up with the Chief Minister in Beijing as a part of a special coverage titled Engaging the Dragon. And as a part of the conversation Shireen had with him there, Devendra Fadnavis told CNBC TV 18 that the government has plans in place to provide the massive land parcels to meet the ambitious housing targets laid out in this new plan.
See, I'm coming out with a new housing policy which would reply each and every query you have raised. So basically it's a well thought strategy by which we would involve the private sector will incentivize them so that they build more and more affordable houses. And
when you say incentivize, what do you mean exactly, sir?
So there are many ways to incentivize. It's like you give them more FAR if they use it for making affordable houses. So there are many initiatives through which freeing some land in Mumbai, which is till now freezed for certain purposes. It's like the salt pan land, which is freezed by the central government. We are into negotiations with the central government, and if the negotiations which are likely to succeed, we may get around 600 hectares of land. So there are many initiatives which would create incentives to make affordable housing.
You know, the development plan that you had announced, you have now gone back to the drawing board because the development plan met with major criticism, and you're now reviewing that process. Do you believe that maybe it was done in too much of a hurry, and what kind of corrections are you hoping to make now in the second draft?
See, basically that draft was being made for last 2 years. And I think that it should have been made properly. There were a lot of problems in the draft. Till it comes to the government has no role to play. It was all Mumbai Municipal Corporation which had role to play. Moreover, the initial draft is made by the commissioner, and he places it before the municipal corporation. So at that level, a lot of problems occurred. That's why, as there was a lot of hue and cry from people, government stepped in. That was not right time to step in. But we felt that although legally or by act we had our own time to step in, but we felt that the situation demands that we should step in. So we have stepped in, and we have asked them to correct the entire plan and to republish the plan.
All right, so that's what we have from China, and you will be getting a lot more over the weekend as well. So keep watching this space. But for now, good night. Thank you so much for being with us on India Business Hour. Have a great weekend.